Are you interested in learning the secrets to achieving financial freedom? Come along as we investigate the fascinating world of Tesla and see how it can help you achieve financial success. What recent events have investors interested and prompted a sense of urgency? How does Tesla differentiate itself from the competition with its inventive approach to electric vehicles? What variables affect the price of Tesla's stock and its prospects for growth? Can Tesla achieve exceptional returns on investment given its tremendous brand recognition and market dominance? Prepare to set off on a journey with Tesla that will lead to financial independence. Don't pass up this fantastic chance. This video will provide you an understanding of the urgency surrounding Tesla as well as current events. It talks about the competition Tesla confronts from other EV firms, as well as the uncertainty surrounding increased capital costs. The film examines Tesla's foundations, Elon Musk's effective leadership, and its technological edge in electric vehicles. It also discusses Tesla's expansion goals, supply chain benefits, and production capacities. It is suggested that viewers subscribe to the content, follow Tesla's actions, and provide comments with their opinions and assessments. So take a seat, press the like button, then click subscribe. That being said, let's begin the video. Just over a week has passed since the CEOs and other leaders sent that letter, and since then, the urgency has grown dramatically. Credit default swap spreads and other indicators have changed, indicating that the markets have begun to respond. When asked what has changed recently on their end, Charles Phillips, recognized Partners managing partner and co-founder, responded as follows. This urgency aligned with our annual gathering, which was attended by investors and all of our technology firms. Talks usually center on advances in technology, values, and operational enhancements. But now is the time to deal with this urgent matter. The uncertainty of whether the cost of capital will increase in the upcoming month, 3 months, or 6 months is a new challenge for us after we successfully navigated through the banking crisis and resolved SPD issues. People don't like to cope with uncertainty. Therefore, this planning aspect is creating turmoil and discomfort. There are already several EV companies operating throughout the world, and many people think that one or more of these businesses may eventually overtake Tesla in the market. Views from analysts clarify how these rivals stack up against Tesla and what that means for the company's future. Major manufacturers like GM, Ford, and Volkswagen have big plans for electric vehicles. In terms of ratings, the main manufacturers, often known as OEMs, are doing fairly well. The fact that they are grouped around 62, 69, and 65 suggests a low danger. Over 90% of the companies that collapsed in the last 20 years had a grade of 40 or lower. Firms with a score of 60 are therefore regarded as being fairly strong. As we can see now, Tesla is unique in that it is not afraid to experiment with price. This enables businesses to gain market share during a period when rising car prices are making customers reluctant to purchase new vehicles. Like many other businesses, the automotive sector is experiencing a perfect storm due to rising inflation, recessionary fears, the shift to electric vehicles, higher prices, and supply chain difficulties. Let's examine Tesla's foundations in more detail. The company's stock has returned an impressive 8,535% over the last 10 years, while the Nasdaq 100 and S&P 500 index returned 348.9% and 187.6% respectively. This indicates that the value of Tesla's shares has increased at a remarkable compound annual growth rate of 56.8%. But the journey hasn't always been easy. Tesla's stock saw a sharp dip after hitting all-time highs in November 2021 at $414.50 due to shifts in the macroeconomic environment and investors' risk aversion in response to the U.S. Federal Reserve's hawkish moves. Since then, there have been numerous ups and downs in the price of Tesla stock, making many people wonder if it is a sensible investment. Elon Musk, the company's visionary leader, is well known for his profitable endeavors, which include SpaceX and PayPal. Musk has gained a great deal of investor trust thanks to his disruptive style and strong leadership. In the next years, demand for electric vehicles is predicted to skyrocket as sustainability and the reduction of carbon emissions become more and more important on a global scale. Tesla is in a good position to benefit from this trend because it was a pioneer in the EV industry and has a large market share and great brand recognition. We'll look at how Tesla stands to gain from this expanding market in this paper. Prior to delving into the specifics, please show comments pertaining to Tesla. Tesla recorded $57.1 billion in total revenue for the first 9 months of 2022, mostly from the sale of cars. During that time frame, Tesla produced 929,910 cars in total and delivered 908,573 of them. Tesla's success comes from both its car manufacturing and its technological innovations in electric vehicles. Significant advancements have been made in the fields of battery technology, autonomous driving, and charging infrastructure. Tesla's products stand out from those of traditional manufacturers because of technological advantages that provide the company a competitive edge in the market. In spite of a difficult year marked by supply chain interruptions, Tesla has seen modest cost inflation and stabilization. The company now feels confident enough to pass these costs through to its customers. With an eye on the future, Tesla is extending its production capacity quickly in order to keep up with the increasing demand for its cars. The business runs gigafactories in Germany, China, and the United States, enabling more output and more cost effectiveness. Through this expansion, Tesla may be able to realize economies of scale in addition to increasing its market share. Analysts at UBS have emphasized Tesla's advantage when it comes to obtaining vital parts like batteries and chips. They predict that batteries will be the next major industry bottleneck, but Tesla will have an advantage over competitors due to their in-house cell production and improved access to raw materials like lithium. The investment bank also claims that Tesla would expand more quickly and profitably than other established manufacturers, thanks to Elon Musk's substantially superior supply network. In line with the growing demand for electric cars, Tesla has increased its anticipated capital investment for 2023. In order to capitalize on this expanding market, the corporation intends to enhance production levels at its factories. Tesla has increased its spending forecast for this year from $7 billion to $9 billion. The $3.6 billion expansion include building a plant capable of producing 4680 cells and expanding the company's gigafactory complex in Nevada, where the much-anticipated semi-truck will be mass-produced. Every year, the 4680 cells can generate enough batteries to power 2 million light-duty automobiles. In an effort to increase its output globally, Tesla is also planning to establish a gigafactory in Mexico, in addition to increasing production at its factories in Austin and Berlin. Furthermore, rumors have it that Tesla has started manufacturing a Model Y variant in Shanghai just for the Canadian market. Tesla is exhibiting its commitment to meeting global demand by shipping cars to North America for the first time from China. Tesla is ideally positioned to lead the way in the quickly increasing electric car sector thanks to its visionary leadership, technological innovations, and growing production capabilities. The well-known electric car manufacturer Tesla has expanded into the energy market by creating and offering energy storage products like the Powerwall and PowerPack. Both commercial and household environments can use these devices. By entering the energy sector, Tesla is able to broaden its portfolio beyond the automobile industry and perhaps capitalize on future growth prospects. Macroeconomic variables, such as interest rates, have the potential to affect Tesla's stock price in the upcoming years, since higher rates often translate into lower equity valuations. Furthermore, because higher rates result in greater borrowing costs, they may reduce demand for automobiles. Even with more competition from other EV experts like BYD, Tesla has managed to hold onto its excellent profit margins of more than 20%. To maintain its market share and put pressure on competing automakers, the business has lowered prices several times in the US, China, and Australia. But among automakers, Tesla is unique for a number of reasons. Elon Musk, the CEO of Tesla, said that the business could sell electric vehicles for a profit while still turning a profit thanks to its autopilot technology during the Q1 earnings call. As the only automaker able to manufacture vehicles that might theoretically be sold for a profit and have the potential to generate considerable future revenue from autonomous driving technologies, Musk claims that Tesla enjoys a unique strategic position. This distinguishes Tesla from its rivals. Tesla has built a devoted and enthusiastic following of customers by skillfully cultivating a strong brand image. Its cars are well known for their efficiency, versatility, and state-of-the-art equipment. The business has a devoted following among early adopters, environmentalists, and tech enthusiasts, which gives it a competitive edge in the market. By examining these components, investors can evaluate Tesla's prospective sales, cash flow, and earnings over the next 5 to 10 years. The business can be valued using methods like price-to-earnings ratios. It's important to remember that there are dangers associated with investing in any firm, and previous performance does not guarantee future results. Thus, before making an investment, careful investigation, assessment of one's own risk tolerance, and guidance from financial experts are crucial. Investors should also take into account Tesla's rivals and their strategy, since other cars on the market might be able to take some of Tesla's market share. S&P Global Statistics indicates that in the first 9 months of 2022, sales of electric cars in the U.S. were made up of 65% of all automobiles, with Tesla being the leading manufacturer. This shows how dominant Tesla is in the market and how difficult it will be for any other automaker to break its record. This concludes the video. I hope you took away some knowledge that will increase your income. Click the like button if you enjoyed this material and you did. Don't forget to subscribe as well.